Hey guys, what's going on? Mike G here, talking to you today about my predictions in the event that there is a market crash. And I'm talking about the stock market. I'm talking about the real estate market. I'm talking about the economy as a whole, United States and globally. Like, there's so much stuff going on and news changes daily. There's updates, so many, I don't even know where to begin. But anyways, let's get into it and let's talk about it, unpack it all, and we'll try to figure out how best to insulate ourselves against all the crazy news and changes that we are faced with on a daily basis, and see how we can insulate ourselves and protect ourselves, more importantly, in the stock market and the real estate market. So guys, with that, do me a huge favor and smash that subscribe button and pound that like button for me, as it really helps out my channel. I'm really trying to grow my channel this year in 2021. I want to make it a great 2021, and I want you to get rich in 2021. So let's just do it. Throughout 2020, we have seen the news headlines.
1 million recover. With me here to start us off, as usual,
COVID-19, mass unemployment.
One job, she lost 3.
This is the longest I've been unemployed. It's been over 4 months now.
The death of small business, political unrest.
Things are quiet now. There were just 5 customers all day yesterday.
It's tough to sleep at night. You can think about it every second of the day.
most orders are for corporate food services, like office lunches. So the push to work remotely is hurting business.
People are not flying in from out of town for meetings. Offices are just closing up.
Unrest unfold across the United States. Under lockdown from his home office in Chicago, the director of Northwestern University's Institute for Global Health.
The stock market's gonna collapse. The housing market's gonna crash worse than it did in 2008. When does it stop? But with all these headlines and contradicting data out there, what are we really to believe? Now, I know the ultra wealthy, they're gonna be okay no matter what, right? Forget the ultra wealthy and their stockpiles of cash. They're gonna be okay in a global economic meltdown. What I'm talking about is, how can the average American investor insulate and protect themselves in the investments that they have, or the investments that they're trying to do, going into this with all this uncertainty and chaos? That's what I want to talk about today. So at the end of the video, I'm going to give you guys my predictions for what I think will happen, and more importantly, why it will or will not happen, and how you can best insulate and protect yourself and your investments to come out of this financially sound and not destroyed. And my goal for this video, guys, is to give you enough information to help you prepare for in the event of an economic crash, or a stock market crash, or a housing market crash for that matter. This is my predictions on what's going on. I am not a financial advisor. So, like I said, don't go selling your Amazon stock tomorrow because I said something in this video. That would be really, yeah, you know what I mean. So with that, let's get into it. Just as a disclaimer, guys, while no one can predict when or if a market crash will happen, I am just giving my predictions based on data that I've analyzed and looked at. This is my own opinion, and by any means financial advice. Now, I think it goes without saying, with so many factors at play, it's very hard to insulate yourself from the risk of the stock or real estate market in these crazy times that we live in. My goal here isn't to tell you what to invest or how to invest. It's merely to make you aware of the economic landscape that we are facing as investors as we move into 2021, and to help you make the best decisions you possibly can for your investment strategy based on your level of risk tolerance and what you're going after. For example, guys, take a look at this article right here. If a stock market does crash or drop a lot in 2021, according to this article, there are a few things to be mindful of. But I digress. Lesson number 1, don't panic sell. It seems simple enough, right guys? But when you're looking at your investment portfolio and you've taken a hit of 25, 35% or maybe more, your emotions can quickly kick in and make you make decisions that you might not normally make, like selling when you're down and out. Historically, this method has proven to be false. In fact, what a lot of investors and data have shown over the years for the long term, and if your stock portfolio has taken a massive hit, it's better to actually double down on the shares and ride it back up. That's what the data shows. I know emotionally it can be tough to do. This method is commonly known as doubling down. No, not that kind of double down. I was talking about this kind of double down. Yeah, that's much better. The second thing not to do in a stock market crash is to watch the market obsessively. If you do this, you will eventually cave into the bad news and do what I said not to do in number 1, which is sell your stock at a loss. To make sure this lesson hits home and you remember it, guys, just remember what the famed investor, the Oracle of Omaha, Warren Buffett, once famously said. He said, "It's not your timing of the market, it's your timing in the market." And the third short lesson to remember for those of you that have a very short attention span like myself is do not be short-sighted. Remember that investing in the stock market is a long-term game. And unless you're doing day trading, which is a completely separate strategy unto itself, and regular stocks, dividends, and mutual funds and investing, ETFs, things like that, it's a long-term play. So don't be short-sighted and think of the short term. If you take a hit, ride it out. Take a deep breath, hold firm, and be consistent above all else. That will pay huge dividends for you. Buy some index funds that have a plethora of companies that are listed on the S&P 500, maybe some ETFs. That's a lot less risk than going all in on maybe one particular tech stock, for example. And guys, what would a conversation about the stock market be without some data to back it up? So I went and researched a little bit of data on the stock market over the last 20 years. The average annualized return on the S&P 500 was 5.90%, so just under 6%. Now, what does that mean? Well, if you had a piece of real estate that was a rental property, and after all your expenses, you calculated it out based on what your expenses were, what the rents you collected annualized over a 12-month period, and your cap rate was 6%, well, you would be roughly in line with the S&P 500 over the last 20 years. In comparison, the Dow Jones Industrial Average has averaged 7.03% since the year 2000. So it's done slightly better than the S&P. Now, guys, if those types of investments put your anxiety level through the roof, then hold on. We got a couple other ones that are not quite as sexy, but might fit your cup of tea. So check this out. There's CODs, which are certificates of deposit. Now I know they're not very attractive, but it's an alternative option. Now you have online checking and savings accounts, and some online accounts actually have savings rates up to 4%. There is money market fund accounts, which have various rates of return. You also have US savings bonds, which you can check the bond rate online. That's super easy to see. And those rates can fluctuate too. Then you have peer-to-peer lending, like places like Patch of Land and other places where you can lend money to other people that are starting businesses or doing real estate investments or something like that. And you can earn 6 to 12% usually is the standard rate, depending on the type of investment that you're funding for somebody else. And lastly, my personal favorite out of this group is REITs, which stands for Real Estate Investment Trusts. Now, a REIT is basically a mutual fund or stock version where you're buying a small piece of real estate that a organization is investing in. So if they buy a huge multifamily complex, well, you're buying just a little share of that complex, and you share, and you also enjoy some of the dividend returns on that. Now, of course, your returns are going to be mirrored to how much you invested, but generally these investments can yield pretty good returns. They do vary, so do your research. So moving on to real estate now, let's say in 2021, as they've been saying in 2020, that they're like, oh, Mike, the real estate market's gonna crash. Everything's gonna crash. I'm not gonna be able to sell my house for peanuts. Well, those speculators are out there and they're not going away. And here's what I have to say to that. As with any economy, it stands to say that there are many factors that affect the real estate market. Obviously, we all know what's happened in the last year during 2020. COVID, job loss, the massive amounts of people that are on their forbearance on their mortgage, landlords that haven't gotten paid rent, and now the new administration has extended the rent moratorium through September of 2021. So that means that's like a year and a half of not paying rent, riding on the excuse of a pandemic. If I was a landlord, I'd be pretty pissed off, but it is what it is. So it stands to reason that because of COVID, there are going to be some effects on the real estate market eventually. Now, some of the things that we could have coming up, there could be a wave of foreclosures as those forbearances come due and the people can't pay them if they haven't gone back to work, or if their job was eliminated due to, AI taking over and jobs being consolidated and things like that. But what I want to talk to you about more is not so much if a crash is coming, but how to buy real estate and invest in real estate so that way you can minimize the effects of a crash on your rental properties. Does that make sense? So the first way to do that is to buy for cash flow. Now, how do you buy for cash flow? It's simple. You don't over leverage on your purchase price. You find the right deal and you make sure that the numbers work and that you are cash flowing from day one. Also, another way is you can do improvements, capital improvements, otherwise known as CapEx. You can remodel, you can increase the equity in that property and refinance and pull cash out. You can buy a home where you can walk through it and see that there may be an area where you could put another bedroom, which would increase the value and the appraisal price, and do something like that and improve the property. So there's ways that you can buy with cash flow in mind and insulate yourself to a degree from the outside world. The second way that you can insulate yourself through real estate investments against a crash is don't buy properties where the rents are too high. What I mean by that is don't buy like a super ritzy, expensive high-rise condo where the HOA is $500 a month and you're only catering to a small portion of high-income earners that are still renters that could possibly be in the market to rent your condo. You're cutting out so much of the renter pool, and you're gonna expose yourself. And if there's a crash and people are losing income, they're not gonna wanna spend a top dollar amount rent. They're gonna be looking for cheaper rental housing solutions, and you will be left holding the bag and paying that mortgage, and that would suck. So I wouldn't suggest doing that. Conversely, if you're buying in a really bad area, you could face the opposite effect, whereas you have very, very high turnover, potential crime, lots of damages to the property to where you'd be constantly writing checks, sinking money into that property, and that wouldn't be leveraging and protecting yourself against a market crash either, just from the other direction. Number 3 is avoid properties that need a ton of remodeling. Now, if it needs maybe an updated kitchen or you replace some grandma's old carpeting with some laminate flooring that looks trendy, okay, that's fine. But if you're talking about buying a place that you gotta gut the place and replace the electrical, replace the plumbing, replace the roof, basically take it down to the studs and rebuild it, that's probably not a smart move unless you have the capital to do that and you're willing to do that. But if you're trying to buy for cash flow and insulate yourself against the pandemic and get renters in there, you probably don't want to take on all that extra work. It's a ton of time, energy, and money that you're just going to, at the end of the day, you're going to be drained and you're going to be upset why you did this. You're probably going to get out of real estate after that. This other idea should go without saying. You want to pay down your mortgage and reduce your debt to where you have no debt service on that property. Because then, as long as you have a renter in there, it will cash flow. And if you are vacant, at least you don't have a mortgage. So you might have just minor improvements or something like that. But the sooner you can pay off your properties and own them free and clear, the better you will be. That math you can't argue with. And the last idea that I have towards insulating and protecting your real estate investments from a market crash is diversify your rentals. What I mean by that, I mean don't buy 10 rental properties in a D-class part of town on the same street. Because if you do that, you will experience the same symptoms of high vacancy, turnover, and improvements, and constantly making repairs on those properties that you will on the other 9. So if you maybe have a D-class rental and maybe some regular apartments in a B-class working neighborhood and maybe one single family home that's in a B plus neighborhood where you have working families that are reliable and pay your mortgage and take care of the place as if they were owners, something like that. So you don't want to have all your eggs in one basket necessarily when it comes to trying to protect your rental investment income in a pandemic or a market collapse. You want to have a few different asset classes with the rental properties that you have so you're not exposed to some of the metrics that you could face that are challenging as a property landlord, such as socioeconomics, rents, crime, location, insurance, type of clientele. All those things will affect the type of cash flow and the type of occupancy that you maintain while you have a rental property. So you don't want to put all your eggs in one basket in one area of town, in one type of housing. Basically, at the end of the day, guys, you want to do the research up front to make sure that you're investing in the right areas of town so that way you don't make these mistakes. And it's really easy to do. You could just go on Google and go to Zillow, go to Trulia, go to Redfin, and you can look and just do your research, pull some crime reports. There's data out there. You just got to know where to find it. And I'll put some links in the description down below to some of the websites that I use to source rental properties and to gather that data to see if I'm making the right decision by investing in that particular area, neighborhood, and asset class. So again, look in the description down below. So guys, on to the predictions part of what possibly could go down in 2021. And no, I'm not gonna do it. I'm not gonna try to predict what global crazy event's gonna take place this year in 2021 that was aired on an episode of The Simpsons back in 1993. So what do I think will happen moving forward in 2021? Well, there's so many things, right? Interest rates continue to be extremely low, and I don't see that changing for a long time. Given the amount of people out of work, some of the data that I've looked at shows that the Fed's going to keep the interest rates very low, which will still fuel a buying frenzy as we've seen, which creates a seller's market because there is way more demand than there is supply right now. So I believe prices will continue to be high. I do think over the course of 2021, as we move into the summertime, possibly even late summer into the early fall, as these forbearances and foreclosures start to come due, I do think that we will see some stabilization of that where the markets will kind of level out and it's not going to be such a seller's market. A lot of buyers will have already bought and you'll see maybe prices decline slightly. How much, I don't know, but I do see that coming in the future based on the data that I've looked at. As far as the stock market goes, I think there's a lot of changes that the COVID has brought on, and a lot of things in our society are changing how we do business. Everybody's on Zoom now. So you're having this like fintech and other stocks that are really emerging industries that are booming, and it's changing the way we do business, the way we communicate with each other, right? So all those socio-economic things are gonna play a role into feeling the market and some of the booms and busts that we're going to see in the stock market. Do I think the stock market's going to crash? I don't think it's going to crash. Could there be some corrections in some industries and some booms in some others? And depending on which ones you're heavily invested in and which ones you're not, you might take a hit and maybe miss a great run, and then you'll feel like the market crashed. But overall, I don't know if it's going to crash. I don't see that. I still see a lot of things continuing to grow and continuing to boom. So that's kind of what I think about that. As far as my prediction goes, I think a lot of the doomsday naysayer talk is all hype. Yeah, there could be some truth to it, but the economy is the economy. As long as we don't print $100 trillion and go into hyperinflation like Germany did in World War II, I think everything will be somewhat stable going into 2021 and throughout 2021. So there you have it, guys. Mike Goodman here, talking stock market and real estate predictions for 2021. If you like this video and you got something out of it, that's awesome. Smash that like button for me as it really helps out. And please do subscribe, as I'm going to be releasing more videos here every week, trying to grow this channel in 2021. So if you're down to take that ride with me, subscribe, and I'll see you in the next video.